Welcome back, my friends. The news today is that shares in Intel jumped 7% as it returned to profitability after 2 quarters of losses. Intel reported second quarter earnings on Thursday, and showed a return to profitability after 2 straight quarters of losses. The company issued a stronger than expected forecast. Are PC finally recovering? Are Wall Street analysts ever going to fall in love with Intel again? The pandemic fueled a boom in laptop sales to enable people to work from home. But, then, there was the post-pandemic hangover. So what does this mean for PC companies? What does it mean for big tech companies? What does it mean for the economy? And, what does it mean for the future of the United States? But, before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. And, before we continue, a word from the sponsor of this video. Today's sponsor is InnerLife.com, creator of the InnerLife STS system. InnerLife STS is a cloud mobile platform for mental health care and its integration with primary medical care. InnerLife STS is designed for assessment, data collection and analytics, documentation, and progress tracking. InnerLife STS creates and composes conceptualized narratives and builds them into professional-grade reports. These reports are designed for use by mental health professionals, primary care physicians, justice system professionals and universities, and include mental health assessment reports, mental health treatment reports, and treatment progress reports. And InnerLife STS uses doctor-selected pseudonames for all patients. So, only the healthcare professional knows the patient identity. Intel reported second quarter earnings on Thursday, showing a return to profitability after 2 straight quarters of losses and issuing a stronger than expected forecast. Here's how Intel did versus Wall Street analysts' consensus expectations for the quarter ended July 1st. Earnings per share, 13 cents, adjusted, versus a loss of 3 cents expected. Revenue, $12.9 billion, versus $12.13 billion expected. For the third quarter, Intel expects earnings of 20 cents per share, adjusted, on revenue of $13.4 billion at the midpoint, versus analyst expectations of 16 cents per share on $13.23 billion in sales. Intel posted net income of $1.5 billion, or 35 cents per share, versus a net loss of $454 million, or a loss of 11 cents per share, in the same quarter last year. Revenue fell 15% to $12.9 billion from $15.3 billion a year ago, marking the 6th consecutive quarter of declining sales. Intel CEO Pat Gelsinger said on a call with analysts the company still sees persistent weakness in all segments of its business through year-end, and that server chip sales won't recover until the fourth quarter. He also said that cloud companies were focusing more on securing graphics processors for artificial intelligence instead of Intel's central processors. David Zinsner, Intel's finance chief, said in a statement that part of the reason the report was stronger than expected was because of the progress the company has made towards slashing $3 billion in costs this year. Earlier this year, Intel slashed its dividend and announced plans to save $10 billion per year by 2025, including through layoffs. "We have now exited 9 lines of business since Gelsinger rejoined the company, with a combined annual savings of more than $1.7 billion, said Zinsner. Here's how Intel's business units performed. Revenue in Intel's Client Computing Group, which includes the company's laptop and desktop processor shipments, fell 12% to $6.8 billion. The overall PC market has been slumping for over a year. Intel's server chip division, which is reported as data center and AI, saw sales decline 15% to $4 billion. Intel's Network and Edge division, which sells networking products for telecommunications, recorded a 38% decline in revenue to $1.4 billion. Mobileye, a publicly traded Intel subsidiary focusing on self-driving cars, saw sales slip 1% on an annual basis to $454 million. Intel Foundry Services, the business that makes chips for other companies, reported $232 million in revenue. Intel's gross margin was nearly 40% on an adjusted basis, topping the company's previous forecast of 37.5%. Investors want to see gross margins expand even as the company invests heavily in manufacturing capability. In the first quarter, the company posted its largest loss ever as the PC and server market slumped and demand declined for its central processors. Intel's results on Thursday beat the forecast that management gave for the second quarter at the time. Intel management has said the turnaround will take time and that the company is aiming to match TSMC's chip manufacturing prowess by 2026. That would enable it to bid to make the most advanced mobile processors for other companies, a strategy the company calls 5 nodes in 4 years. Intel said on Thursday that it remained on track to hit those goals. Earlier this year, Intel cut its quarterly dividend by more than 65%, from 36.5 cents to 12.5 cents. CEO Pat Gelsinger said that the company's board was cautious in weighing the first dividend cut since 2000. He added Intel intended to resume growing the dividend over time. The board and I continue to view the dividend as a critical component to the overall attractiveness of Intel, he added. The board and I remain committed to maintaining a competitive yield, insisted Gelsinger. Intel's dividend yield is now 1.45%. That yield is down significantly from its prior yield of 5.6%. Prudent allocation of our owners' capital is important to enable our IDM 2.0 strategy and sustain our momentum as we rebuild our execution engine, Gelsinger said in a press release. Intel's stock has fallen nearly 60% from its 2021 high. And that is for a combination of reasons. A challenging PC market. And a host of company-specific issues. That includes a surplus of chips. No, not potato chips, semiconductor chips. And underutilized factories. The company said it aimed to deliver $3 billion in cost savings this year. In part through compensation cuts. Intel executives will take staggered base pay cuts. The company is also cutting benefits valued in the tens of millions for lower-level employees. The pay cuts will impact executives at all levels. Starting with CEO Pat Gelsinger. And ranging down to mid-level managers. Gelsinger will have his base salary cut by 25%. But the vast majority of Gelsinger's compensation is from stock awards and options. Gelsinger made nearly $179 million in total compensation for 2021. Intel's share price has fallen over 50% since February 2021. That was Gelsinger's first month as CEO. The real costs may be felt among Intel's rank-and-file employees. Intel employees, like many Americans, rely on bonus payments and retirement matching programs. Intel cut 401k matching in half from 5% to 2.5%. That will potentially saving Intel hundreds of millions of dollars. Intel rival AMD, on the other hand, beat on both the top and the bottom lines. But AMD guided down 10% for the upcoming quarter. Intel shares have a long way to go in order to regain their all-time high. These are tough times in the PC patch, and for semiconductor companies in general. Intel has plans to get billions in funding from the 2022 CHIPS Act. The CHIPS Act is a package of U.S. government spending designed to boost chip manufacturing in the United States. Overall company revenue declined by a whopping 22%, peak to trough. But, it now seems to be on the road to recovery. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.